equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, where we will help you learn to invest in 15 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. Glad to be back for another episode.
Me too, and I'm very excited about this one.
Yeah, are you? You've been waiting for this?
I know you've been sitting at home, ticking that brain over, thinking long and hard about what you're going to be doing.
Yeah, that's it. I've been stewing on this episode, making sure that I got it exactly right for you.
Yeah, thrown a couple of sick days.
Yeah. Sorry, work.
Taking a few days off work to really make sure you nail this one.
And yet somehow I am still down.
Well, what are we talking about? So last episode, episode 64, I revealed my investing strategies for the ASX Sharemarket game. For those that
now, to be clear, this isn't real money we're talking with. just to caveat.
I wish. Yeah. Yes, to caveat that, this is not real money. For those that are unaware, the ASX twice a year open up a game that allows you to test your strategies and play around with $50,000 of fake money, and the game replicates exactly what's going on in the Australian stock market. And you get a list of shares that you can trade with, and about 4 months to do so, and you're competing against everyone around the country who decides to enter. So this year, Ren and I decided to sign up, put our hypothetical money where our mouth is, and give it a crack. So it started last Wednesday, and I jumped in on Wednesday. Ren decided to take the more reserved approach and really give some thought to what he is going to be doing. So this episode, we are going to be revealing Ren's strategies for the next 4 months. So take it away, Ren.
Yeah, I think you're talking me up a little bit too much there. I actually just wasn't as organised as you.
Yeah, and so you did go to work. There were no sickies.
Yeah. That's it. Yeah, so obviously we did our 2-week stake promotional trading comp, which we unceremoniously lost in. So I think we both learnt a lot from that experience, and we're both a little bit out of our comfort zones for this. This competition is 4 months?
Yeah.
So there's none of this, buy and hold and let your investments compound over time, or find deep value and let the market realize its value. You've got 4 months. There's no pride in second place. You got to go for the win. So we're both trying more momentum-based strategies.
But it's better than 2 weeks. I mean, you can still use some macro trends and that sort of stuff, I guess, to come into play here. Whereas 2 weeks was just literally, let's try and pick something and hope for the best.
Yeah, well, we managed to lose about 10% in 2 weeks, so I'm backing us in to be able to lose close to everything in 4 months.
Yeah, if we're losing 10% every 2 weeks over the next 4 months, we're done.
Yeah. Now, the good thing is, what I learned from the stake competition is set your stop losses, but set them wide. And all 4 of my investments so far have stop losses on. So, I'm not gonna flame out in 2 weeks, I hope to say.
Nice, Ren. I'll add to that so do mine. So I guess we've both learnt something that we've both learnt the same thing from, and the stake is it's also more about managing your money while you're in the trade as much as it is about choosing the trade in the first place. So agreed.
Yeah, you could almost say we learnt from our mistakes. Oh, that's it. That's me done. That's my best for the night. All right, so
let's
onto the main
strategies.
event. So strategies. You gave us a good description of sort of overarching strategies, and then you drilled down into the individual stocks you chose for those strategies. I'm not as considered as you for this, I guess. I sort of did the other way. I went bottom up. I just cast a pretty wide net and started looking at companies, and I've chosen 4, and I have a reason why, and I'll go through each of them. But yeah, I'm not playing on overarching themes or anything like that. I've just found 4 companies that interest me. Now, I should say, a lot of the stuff that we've researched is on value investing, and there's there's different ways that you can value stocks. You can do a discount cash flow. You can look at some key metrics like price to earnings and stuff like that. And there's some analytical work that you can do. A lot of my research for this was really just Googling their charts and looking at what direction their chart was going in.
Mm-hmm.
So
It's a good place to start.
So I think when I use the term research, I use it very loosely here. But the first stock that I chose was Cleanaway.
Drum roll.
Oh, sorry.
Oh, interesting.
And I know that you are also in Cleanaway, so I feel like I'm cheating a little bit.
No, all good.
But when you look at their 1 year chart, it is bottom left to top right almost by definition. A year ago they were at $1.20 odd. Now they're trading in $1.90. So it's been a pretty consistent rise up. And so I have gone on Matt Leibowitz's recommendation, Matt from Stake. And if a stock is rising, it's likely to keep rising. So I am jumping on the Cleanaway bandwagon. So that is stock number 1.
Yeah, and don't take that advice as the gospel. Obviously, if it's rising, it has the potential to fall. You need to consider a number of other things if a stock is rising, it will continue to rise. But yeah, good place to start.
Yeah. Well, definitely don't take it as gospel because I have lost $200 on it so far.
Oh, no, Ren.
I know. Maybe I bought it right at the peak. All right. So do you have anything to say about Cleanaway?
No. I will add to all of this later.
Yeah. Okay. So the second stock that I chose was NextDC. Now,
what's the ticker?
NXT.
Mm-hmm.
So this is a data center company. It's been a little bit of a market darling for a while. I chose it for a similar reason to Cleanaway. It's got a solid left to right chart. Maybe not as nice as Cleanaway's, but pretty nice. A year ago, it was trading at about $4.18. Now it's at $7.20. It did peak at about $7 or just over $8 even a few months ago, and it's come off a little bit since then. But I'm hoping it's building and about to make another push to its all-time high. So those first two I've chosen for very similar reasons, just because it's got solid bottom left to top right movement.
Epic. Keep going.
All right, the next one. It's a little bit controversial, and I'm sure you're going to have something to say about this. But the next one I've chosen is Wesfarmers.
Oh, you know what? I would have said something controversial about it a couple of days ago, but I kind of like how they just made another demerger, didn't they? Or they're selling some assets in one of their is that coal business?
So they sold their Curragh coal mine a while ago. Yeah, so they're out of the coal business.
They just put something else on the market, selling a 40% stake or whatever for about $890 million. Did I make that up?
You might not be. I'm not 100% sure, but it wouldn't surprise me. They're definitely freeing up cash. They're also closing 20% of target stores, so they're definitely freeing up capital. So to give you the reasons why, first of all, since April, the Wesfarmers share price has been on a tear. In April, it was trading at around $41. It's now,
because they said they were getting rid of coals.
Yeah. It's now at $50.
Wow.
So I think that's a solid, left to right in a short time. So obviously jumping on the momentum. But the other reason I chose Wesfarmers is obviously this demerger is going to happen at some point. No one is certain on the exact date. And I think there's a serious attraction in being given Coles shares for free. So I reckon when Wesfarmers announce the date of the Coles demerger, people are going to jump into the stock to be able to get free Coles stock, basically. And then I also think once Wesfarmers has freed up their capital, they're generally good at buying businesses. They're good capital allocators. And so whatever they do next, I think people are going to want to be exposed to. So I'm betting on a bit of good news and a bit of momentum from this demerger process, pushing the price up a little bit more as demand picks up.
Yeah, I would agree with you on the capital allocation. I think I've just got it up here. So they've actually sold 40% of Bengala, a stake in a mine called Bengala, and that's going to net them $860 million. It's a thermal coal mine.
Wow.
So they're selling it to a group called New Hope. And yeah, it made me think, they're going to get rid of Coles. They've now got another $860 million coming their way. They're going to be pretty cash rich. That you would expect them to do something pretty hefty with it. So it'll be interesting to see.
Yeah.
Whether or not that comes in the next 4 months, who knows?
That's
Word on
it.
the street is that the merger is going to happen shortly after Christmas, but I'm just speculating.
Yeah. So, I mean, I work for them and I don't even know. But it doesn't have to happen in the 4 months. But if Wesfarmers announce it in the 4 months, then I'm hoping to see a little bit of movement. So yeah, stock number 3, Wesfarmers. Last one, also getting on this bottom left to top right movement is WorleyParsons.
Okay.
So this
They've
is
been around for ages.
Yeah, they have. So a year ago they were about $12.20, and they're now at $18.70. So pretty solid, 50% increase in a year. But I also really like the industry they're in at the moment. So they do sort of consulting and engineering and project management and stuff for a lot of energy companies, oil and gas companies and stuff like that. And the industry at the moment is in, oil prices are rising, and there's a lot of demand for sort of natural gas. And what that means is that, a bunch of coal seam gas wells are being turned back on. There's just a lot of there's a lot of capacity that has been turned on in the system, and that's probably good for a professional services company in that industry. So I think as the oil price rises, that's good for them, but also as latent capacity comes back online, that's good for them as well. So that's a little bit of a macro one, but also just looking at a bottom left to top right chart.
They've been on a steady up since 2016 if you have a look at it.
Yeah,
from $3 to 18.
Don't look before then though, because
the reason I'm looking at it beforehand is because this is a bit of a deja vu moment, because the guy who won this competition in our class when I was back in year 10, 2000, and won't reveal the year, but he actually won the comp because he bought into WorleyParsons, and they had a tear in late 2007, I'm pretty sure, or 2006 it was.
Mate,
yeah,
you're showing
so
your
I'm
age
looking
there.
at it. I know. It's went from 15 to 50 in a year.
Wow.
Yeah.
Well, I'm
so
hoping
who knows, Ren? You could be onto something here.
God, you're gonna get PTSD if your classmate beat you in this competition because of Worleyparsons, and then I beat you in this competition because of Worleyparsons.
I'll give up. I'll just buy WorleyParsons.
Yeah. You'll spend your life just trying to do a hostile takeover of them.
Nice one. Do you want to tell everyone where you've found the graphs for that? Was it just a simple Google search, or did you use a specific platform?
So what I did was I just started Googling stock screeners, ASX stock screeners, and this is pretty poor of me, but I actually can't remember which one I ended up using, so I'm not being much use. But I literally just was Googling, found one, and then started putting in different parameters. So price change over a year, volume, and then I just sort of had a short list, and then I was just Googling them, reading about them, looking at their charts. It was really just a sort of mindless wander down what Google had to offer.
But that's sometimes the best way to do it, I reckon. And it's kind of similar to one of the strategies that I used, and it's a great way for everyone's probably heard this bottom left to top right, and we're talking about the price graph here is moving from, a low price to a high price over a set period of time. And you would use a stock screener to do so. A great way to do it would just be to set the parameter, as you said, Ren, even like a 52-week high, filter it by the top rises over the last year, and just work your way down the list. Just click on the ticker and use ASX or Google, Yahoo Finance, whatever it is. And just, away you go.
Yeah, there's heaps of free ones out there. So just have a Google, have a play around.
There's a number of comments that I'll make, but I think I'll wait until we next update on this.
Okay.
Can you just tell us how much you spent on each stock?
Yep. So
and where you're at today?
Yeah, sure. So 10 grand on each stock. It's 10K still in cash.
Do you know how you're going to deploy that next 10K?
Not at this point. I want to keep some powder dry. I just want to wait and see. So that's going to probably sit there for a little while. And in terms of my overall portfolio, I am down $533 so far.
What's the biggest loser?
A TV show on Channel 10. Biggest loser is NextDC, down $331. The only one I'm up on, so Wesfarmers is exactly flat. I've made back brokerage.
That's brokerage, yeah.
Yeah, but the only one that's up is WorleyParsons, up $1.41.
Right.
So, not doing too well so far, but early days. So,
and that's a good point you make there with the brokerage. You know, when I remember first playing this game, you would buy a stock and then you'd quickly look at your portfolio and it would say down $20, and you'd be like, what? But it's the same price that I bought it at. And the good thing is that in the game, it is highlighting the fact that because you have to pay brokerage, you actually need to make up that $20 to be flat, and then you need to make some. So big thing to consider in this game, because $20 is actually a considerable amount, considering you might be buying 5 to 10 stocks. That's $200 in brokerage that you're going to pay that you need to make up somewhere in profits.
Yeah,
So.
which is probably a really nice segue to wrap up this session and just say that's why we trade with stake. Because there's no brokerage, so every time you trade, you don't have to spend $20. And if you do want to sign up and give stake a try, you can go to equitymates.com/stake.
Absolutely, Ren. Well, I've made a couple of trades since we spoke, but let's leave it. We'll keep the suspense and we'll update next time we chat. How's that sound?
Yeah.
Nice one. Well, may the best man win.
Yeah. I'm trying, mate. I'm trying.
Hey, come on. All right, man. Talk to you soon.
All right, mate.
Hello, mates of Equity Mates. Or I guess that just makes you Equity Mates. Anyway, it's Bryce here. One of the most frequently asked questions we get is, where do we find information about all these stocks, and where's a good place to start? Now, we could do a whole episode on this, and we often do touch on it, but the best place to start is by signing up to our Thought Starters weekly email. Each week, we send you some cool stuff that has caught our eye during the week, as well as some more detailed articles on stocks and invested relating content. We also include Basics 101. These are articles tailored specifically for beginners to really propel you on your way. We don't spam you. I mean, we hate spam. It's once a week and there's enough stuff in there to occupy you for a full day of browsing at work. Now, Ren puts a lot of effort into finding quality articles for you guys, so if anything, just sign up so he feels the love. Head to equitymates.com and chuck in your email at the bottom of the page.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.